Hi, welcome to the Market Alert for Wednesday, the 19th of November 2014. And starting off in the 5-minute chart, let's have a look at the pre-market first. We can see the market playing around, closing above, then closing below the psychological level there of 17,650. You can see that grey shaded line there. So the market, say, sort of oscillating really around this. You can see there, sort of through the centre of the price action pre-market. And then, of course, the market opens at 2:30. We see the market moving higher there, 2:35. And then at 14:40, we have a buy signal with some professional buying as well. The green there indicates that there is fresh buying coming into the market. And we see the market trading up to the 20-point scalp. An interesting point here, because the market's obviously not trading all the way to the psychological level that it has done before, and stopping sort of midway, which is unusual, but there were some clues there. And again, this will all be revealed within the test bar videos that I'm still working on at the moment, but hopefully we'll have completed by the end of next week. I say a lot of information to impart in these, of course, with some real time examples as well. But coming back here, we can see the market there trading up and then the selling coming in. And if you have a look at the previous bar, you can see how the market came through the previous day's high. And if you have a look at the volume, you can see this here. It's fairly low, so the market was starting to run out of steam. And also there's a clue in this bar where the market's come off the high, so there's some resistance and some selling around. This is absorbed, the market then moves higher, and then the professionals think that's enough, let's have some profits out of this trade. And this is indicated here with the volume being higher than the previous bar, and the range of the red bar, the up thrust there, is narrower than this one. We've got the selling, an indication there's going to be profit taking coming into the market. So we see the selling coming in, it then evaporates, the market finds support. And what I mean by this, again, this is something else I'm going to introduce to you. A simple thing like a Fibonacci retracement from the recent low to the high. You'll see the market stop bang on 62%. The market turn around and then move to the upside. And going on for the remainder of the session there, sideways, struggling to... well, not struggling, just trading sideways, sitting on top of the high. Again, notice this, how important this is. Using this as a new support, a new floor, and then the market going on and trading up until, again, we see this selling coming into the market. The market attempts to move up to the selling area, the profit-taking area we see here. I'll just remove that one. And you can see there that the... I can just activate this and drag it across. There you go. So you can see just after the market's heading towards the close, how price is closing back above where we had the previous selling. Again, this can be seen here with this increase in volume above the average red, indicating selling. We get potential weakness there. The market attempts to move higher with some professional buying, and then it just disappears, and then the selling comes in, and there you see the market moving lower, and overnight we've got prices just stuck in a narrow trading range there. And no doubt a part of the reason for this is of the news, which we'll look at in just a moment. But in the daily charts, if we just narrow this down a bit so we can see the highs there, and again, if I just mark up the high, you will see that yesterday the Dow put in a new all-time high, and I'm expecting the same today. And the reason for that is in the economic news. If we have a look at the news for later today, mainly afternoon, we've got housing starts at 1:30. Crude oil inventories we're not really interested in, but this one we are. FOMC meeting minutes 7 p.m. Last month the market put in a nice buy signal beforehand. The market traded up nicely, gave around 30 plus points, and then the market traded sideways for the duration until 7 p.m. when the minutes were released. And there was no further buy signals following the news. As I said last month, that the market, as far as the FOMC minutes are concerned, it's probably the most important, high impact news item to pay attention to. The market will be volatile. It always is at 7 p.m. as Yellen says what she intends to do, but then never does it. So 7 p.m. important. Don't be in the market. And again, pre-market is always difficult to call because sometimes the market can just trade sideways and do nothing and wait for the news at 7 p.m. Alternatively, it will trade and beforehand and give some profits beforehand. So it's just a matter of what the market shows us at the time. The general pattern, of course, as I've mentioned before, for the last 6 years has been that the market's generally marked down beforehand, then goes up with the release of the FOMC information. But of course, at some point, that's got to change as well. So don't buy into that pattern because, as I say, at some point it has to change. And in particular, talking of, Yellen was stopping was going to stop the bond buying program last month, and of course this will cause taper, which should have a negative impact on the market. But of course, again, if you cast your mind back to last month, by the Friday after the FOMC meeting, the market had made a new all-time high, which was this bar here, and that was because the Japanese announced that they were going to start another QE program and print more money and pump it into the economy, which they've been trying for 30 years and it's failed. So they're obviously taking the time to understand and learn that this doesn't actually work. But that's another story. So that aside, we should see a reasonable move around 7 p.m. Certainly some volatility there when Yellen releases the minutes there. Just a quick look at the implied volatility before we conclude. And in the implied volatility, 10.68, up slightly from yesterday. But what's nice to see here is the historical volatility is now starting to move to meet the implied volatility line. And this is something that we want to see cross before we get another correction in this market. Right, that's it for me for this morning. I will see you in tomorrow. So like I say, keep in mind FOMC 7 p.m. this evening, GMT. Don't be in the market when this is released. As ever, thanks for your support and for watching. See you in the next one.